This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
It entices those type of buyer or sellers, to sell. And I think you're going to see those sellers or developers that are in those recourse loans who received an 85, 90%, leverage to get their construction loan. And you can't refinance with that.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Finding good markets is a really key element to success, especially given today's market. It's a very, very tight market to find actually good deals. Now, selecting the right strategy in that market is also necessary to really crush your goals. Now, the key is to pair the right strategy with the right market dynamics. Now, this includes optimizing your cash flow, optimizing your appreciation, while putting all your deals together. Now, our next guest knows all about this. He is an entrepreneur and investment manager with a history of success in building and rebuilding profitable businesses. Now, early on, he found success in the residential brokerage space, where he transacted over $40 million in sales in a very short time, and he helped lead the #1 real estate team in the Carolinas to produce more than $140 million in annual revenue. Now, in 2019, he founded QC Capital, which acquired over $100 million in commercial real estate assets across the U.S. Now, at QC, he oversees business operations and is responsible for the firm's overall directions and strategies. Now, he's also named one of Charlotte's 30 Under 30. He's one of the elite 50 entrepreneurs, and he's nominated for the Forbes 30 Under 30s list. Now, with all that, I'd like to welcome Chris Salerno to our show. Chris, buddy, thanks for coming on, man.
Yes, thanks so much for having me. Very excited to be here and add value to all your listeners.
Yes, excellent. Now, if you like what Chris has to say, you can reach him via his contact page at qccapitalgroup.com. Okay, Chris, go ahead and tell listeners a little bit about your journey. How did you get started in all this?
Yeah, and you summed it up very well. I wish I had you for every investor call to explain my background. You did a very good job. I appreciate that. I started out in the single family space around 7.5 years ago. I wanted to get into real estate because I knew it was a necessity. We all need shelter. Right now, we're Eastern Standard Time, early in the morning. Tonight, when we go home to our families, we're going to go to shelter. And you can't take that away from us. We need it. It's a necessity. And so I realized that, and what also attracted me to the real estate industry, it's always different. Yes, you're going to have those, cookie cutter communities that are, the same type of houses on the exterior, but still real estate is always different. And so I just gained a very strong attraction to that. After doing so, I was in the single family space, realizing that economies of scale. I had single family rentals, I had fix and flips that I did. And I realized that you can't scale it to grow a very, very large company. And if you want to, it's going to take you the next 40 years to do so. Also, if you have one single family home, one tenant decides not to pay, or a hot water heater goes out, I said, wow, there goes all my profits. My profits are literally wiped out for the whole year. And I saw a lot of risk in that. From there, in middle of 2018, there was a guy that was starting to become famous. His name was Grant Cardone. He had around 300,000 followers on Instagram when I first started following him. And he did his first apartment syndication around that time. Don't hold me to it, but I believe it was around that time. And so I said, what is that? And I went to the SEC.gov, which a lot of people may not know, is that you can actually search up, if they're public or 506c offerings, you can search up the PPMs. And so I searched up his first PPMs. I printed it out. It was around 300 pages, and I started reading through it. Now, it took me a couple weeks to read through it because it put me to sleep a couple times, but I did so. And I started educating myself on how to structure a syndication, what type of fees are involved, the language, the business strategy, because you have to put your business strategy in the PPMs, everything about it. And then I started listening to podcasts, very similar to yours, watching YouTube videos. And I connected with a gentleman, and I never knew he had a coaching program. Ended up finding out he did. I then joined his program to educate myself on the multifamily side of things, and that's when QC Capital was formed at the beginning of 2019. And then within 3.5 years, we scaled to a little over 200 million of assets that we acquired. We sold off 3 successful assets, and we have another one here coming very shortly, which we're very excited about. And yeah, that's how QC Capital was formed, and we're looking to grow substantially, as you and I, chatted earlier. Right now is the time to buy with fixed rate if you can get in and make the numbers make sense.
Yeah. It's funny, something you said earlier about the single family space and flipping. A lot of the guests that come on here, that and myself included, that's how we started with single families and flipping and all that fun stuff. But I think what you said about how if something happens to that single home, blow out a water tank, the roof blows off or whatever, your profit for the entire year is gone, right? And more so on, like, say, a 22 unit or even a 16 unit deal, right? Because if there's a mishap, a boiler goes out here in Cleveland, we have boilers. I don't know if you have any boilers out in your neck of the woods.
No, we don't. Very rarely.
Yeah, but the boilers here are serious money. They're serious cash, right? And when I say serious, I mean 40, 50K. But 40, 50K on a little 16 unit, that's your NOI for the entire year. And if that boiler dies, you're done. You're done. There's no distributions that year. It's over, right? And that's the problem with small deals. And it sounds to me like you realized that early on. It doesn't make any sense. You need that scale. You need that scale.
And the biggest thing is staying consistent and staying disciplined. I see a lot of people get in this space and they say we're focused on 100 to 350 units, and then they can't find a deal or they're struggling finding deals. So they are saying, well, now we're going to go buy a 20 unit or a 50 unit or a 60 unit. And so they settle for the smaller stuff. I will not settle. There's been times that we bought a 92 unit because it was a great numbers, great location, and we have the ability to buy some other units to get it to 100. But I won't go to a 50 or a 20 or 40 unless it's in a personal portfolio. We really focus and we're really disciplined on that 100 to 350 units. And I think it's key to stay disciplined, to stay strict to your criteria, get out there because it's not easy. You're fighting against the big dogs when it's 100 to 350 units, and you have to make your way and you have to show these brokers, look, we're here to play, we're here to stay, and we're not going anywhere. And I think that goes across very, very strongly amongst the brokers and amongst everyone in the industry.
Yeah, and that's exactly right. I mean, we're targeting deals in excess of 100 units. We're actually doing more development these days than stabilized asset acquisition. And we talked about it in the green room. It just makes sense to do it these days to meet the demand that's out there. So it is the broker relationships that we find are what's absolutely necessary to cultivate in good times and in bad. Like we're going to be heading into some tough times right now. As of the time of this recording, we're about mid 22, and I think a year from now we might look back on this and say, oh wow, well those are so great times back then. that's a whole other discussion. So tell me a little about the deals that you're going after these days. I know we talked a little bit in the green. You got a few deals cooking right now. What sort of deals are they, and how are you finding them, and where are they located?
Yeah, so the deals that we look at are Class A, AAA, deals that you and I would put our families in, very good quality deals in the large major markets here in the Southeast, between 100 and 350 units. We also are venturing off into development, which we have our first development underway here in Charlotte, North Carolina, which we're very excited to start that. and break ground on that. However, how are we finding them? We have a director of acquisitions who, to be honest with you, is just crushing it. It's a relationship type of game, and he builds very strong relationships with the brokers. And he goes out with the brokers. He has lunch, dinner with them, especially here in Charlotte, because most of the brokers in the Carolinas live in Charlotte because it's in the middle of the Carolinas and it's easy access to the major cities that they're selling real estate in. And he knows that it's a relationship type of game, and that's what he does best. He builds the relationships with brokers. He builds the trust amongst them, knowing them that we can close quick. We have hard money that we're placing down, and we're not here to play games. We're here to close deals. And brokers like that, and that's how we're sourcing deals. With the relationships that we have with owners as well, that helps, but a lot of them are just going to go straight with the brokers. So we're going to keep building the relationships with them because that's been our success lately.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
Yeah, 100%. Now you're doing deals in other states as well, right?
Yes, so we're focused on the Carolinas, Nashville, Tennessee, Atlanta, the major markets in Florida and in Texas.
Okay, so and how do you expand the strategy of working with brokers in those other markets?
Yeah, that's a great question. Really expanding those strategies is getting on the phone, building those relationships in the other markets. When we get in best and final on these deals, the director of acquisitions will go out to visit these deals, and that's his time to shine in front of them and build the relationship one-on-one in person. So he goes out, tours the property, and then if the broker's available, takes them to coffee, lunch, and builds a relationship in person and builds that trust in person. And obviously, it's going to take time, over these years. It's going to take time to build those relationships with these brokers. So it really counts, and it's important to have that individual, to have that personality to build those a lot sooner than 1 to 2 years.
Yeah, I mean that's probably the biggest struggle. It's that, like you pointed out a second ago, having a local relationship with the brokers, grabbing lunch with them, dinner with them, drinks, whatever, celebrating a recent buy that you guys took down. It's easy to do, but to your point though, flying out from NC all the way to Dallas or wherever, that's a long flight. That's a long flight.
And we cut that down. That's a long flight. It's a lot of it's a lot of money for the company to buy a plane, to buy a flight, to buy hotels out there, food, all that. It's a lot. And so we used to do that prior to LOI when brokers would say you have to tour before LOI. We said no. We said we will tour when we are in best and final. Because we found that we would tour 2 to 3 assets, travel to tour to 2 to 3 assets just to submit an LOI. And then we are 5 million below everybody else because the market's so wild. And so it's like, why are we wasting our time, our money to go out here to look at these properties when we can't even make it in best and final? So we then put a hard stop on that. We explained that to the brokers and they all agreed. We had a little kickback, but at the end of the day, they all agreed because of the market. And once we got into best and final and we finally made it in best and final, that is when we would go out and tour the properties.
Yeah, I mean, that makes sense to me. I mean, as a rule, I always tour the property before I send in an LOI because for the broker, I have this whole rule about if I slap down an LOI, I'm taking that sucker down. So the LOI is as good as a PSA, and it's as good as this thing shut down. So that's just one of the little things I do. But yeah, it would certainly be much more difficult to do if I were doing like an out-of-state type scenario like in Dallas. But no, I think the strategy is sound. But I also think, we talked about this in the green room, it was very frothy. The market was very, very frothy 12, 18 months ago. I think nowadays I think we're already seeing the shift. We were just talking about that in the green room, man. It's like we're already seeing financing terms get adjusted. We're seeing valuations also come down a little bit on some of these deals, right? I mean, maybe are you able to talk a little bit about that?
Yeah, we're definitely seeing evaluations come down. I mean, the debt yield for the debt that we've seen went from 4 to 6%. With that large of a gap, that has definitely decreased price. As we talked about earlier in the green room, were sellers that took the properties off market. All buyers backed out when we were invest and final on certain deals, and we submitted extremely lower than our initial LOI, and the sellers didn't like it, so they just took the properties off the market. We're investing final on a deal here in Charlotte. Hopefully we will get. And the initial pricing guidance was between 41 and 42. LOI, I talked to the broker. He said it'll probably end up anywhere from 36 to 38. Just because the debt sides change. And so it entices those type of buyer or sellers, to sell. And I think you're going to see those sellers or developers that are in those recourse loans who received an 85, 90%, leverage to get their construction loan. And you can't refinance with that. So you're going to see a lot that are going to have to go ahead and sell, and they may not have they may not sell at the profits they want to sell at, but they're going to have to because they're in a recourse construction loan that has too high of leverage and they can't refinance, get it out. So they're only forced to go ahead and sell.
Yeah, I think that we're going to see a lot of cases like that coming up here soon. So part of it is being disciplined about the return targets, and also sourcing alternate types of debt. It sounds like, after talking to some of my buddies in the last couple of days here, where I think where the Fed is going to be cranking up rates here as of this recording. So post recording, we don't know what's going to be. Obviously, we don't know what it is now. But we know it's going to go up, right? I think everybody agrees it's going to go up, and it's going to be very, very important to stick to your discipline in terms of your return targets, but also start finding alternate sources of debt to put on these deals. Because one thing I learned from 2010, 2012, in that time frame, the local banks dried up, and it was all like private companies that were really funding these sorts of things, right? It just depends. I guess they really have to get really deep into finding alternate sources of debt. That's what it sounds like, right?
Yeah, no, very much so. You whether you like it or not, there's a gentleman who wrote the book called Art of the Deal. And his name's Donald Trump. And the reason why I like the name of that book is because it's how you structure a deal. It's how you go to, certain community banks, certain local banks, maybe even credit unions, if you're lucky, thinking outside of the box to structure the deal to make sure the deal makes sense during times like this, when the bridge lenders' pencils are down, when there's high leverage for Freddie and Fannie. It may make sense to go to a community bank where they can give you maybe a 65 or 70% leverage because they live in that market. They know that market. They know the growth that's happening in that market. I talked to a good broker of mine who runs Princeton Capital up in New Jersey, and he told me he got a 2.85 interest rate. I said, how the heck did you get that? He said, it was a local bank. A local bank in New Jersey knew the properties. They actually owned a couple banks across the street from some of these properties. And so they were super comfortable with that market. And they decided to go ahead and, lend at a very attractive interest rate.
2.85, that must have been a while ago.
That was Q1 of this year.
Yeah.
That was Q1 of this year, which is still, it was still great. I know it wasn't that long ago. That's still a great number, even in Q1, but still, it's a local bank.
Right. And we're looking at 6% now in some cases, right? It's ridiculous. Comparatively speaking.
It's wild.
Yeah. So in terms of property management, shifting over to property management, who's currently doing your property management?
So we utilize Wood Partners. They are a phenomenal company. You may also know, or Wood Residential. You may also know them as Wood Partners. Are the number one largest multifamily developers in the United States. Phenomenal as a third-party property manager. Right now my capacity is not doing the day-to-day of property management. We may bring it in-house when we're at a certain extent and a certain level as a company. Right now, we are extremely happy with the relationship that we have with Wood Residential, and we're looking forward to continuing that relationship with them.
Nice, nice. Is there anything special that you're looking for when you're doing your weekly calls or doing your, I guess when you're managing the manager? Is there anything special you're doing that you find that you do that no one else really does?
Yeah, I mean, I think something that we do is we are, I wouldn't say no one else really does, but we really stay on top of them. If they say they're going to do something, we hold them accountable for doing it. We make sure that notes are taken for every meeting, and any assignments are emailed right after. So right after those asset management calls, assignments are emailed, and if anything's missed in those assignments, I chime in. But we make sure that we hold them accountable, and that we're making sure that they're staying on top of it. Also, you got to incentivize them a little bit. I've had really terrible property management companies. I've had great property management companies. And thankfully that Wood Residential, honestly, there's not much I do on those asset management calls. And as we bring on an asset manager, which I have an interview today for a couple. As we bring on an asset manager with Wood Residential, there's not much she or he's going to do because they are on top of it. We're very pleased, and it makes our lives easier because we can then focus on acquiring more deals with a great property manager with Wood Residential.
I want to take a pause from today's show to share something that I've been encountering. As I speak to many investors, there's this concern, and the concern is centered around the inflation we've been experiencing and the devaluation of our currency. Now, we've seen some of the highest inflationary periods over the past 30 years. That's up over 8%. Economists actually believe that inflation is closer to 20%. Some say it's even more. Now, what does this mean for you? Well, it means that money that is sitting in your bank account or self-directed IRA that's not invested in physical assets that hedge against inflation are losing buying power. That means that every minute, every second, that dollar is becoming less valuable. You see this every day. You see this in the groceries you buy, the gasoline you buy, everyday items that you're buying on a daily basis are becoming more and more expensive, and you're using a less powerful dollar to buy these items, meaning that dollar is losing value if it isn't put into a property that produces cash flow, just like real estate does. Now, our team here at Bulletproof Cash Flow has put together a series of weekly webinars that cover real estate investing like multifamily, net lease, and real estate development. Now, these are purely educational webinars. In these webinars, we talk about why real estate offers a powerful opportunity right now and why it makes sense to invest in these assets today. So if you're interested in real estate or want to have the opportunity to get involved as a hedge against inflation yourself, I encourage you to go to bulletproofcashflow.com/webinars. That's bulletproofcashflow.com/webinars. Now you go there, these webinars are 45 minutes and they cover different topics every week. We go over the things you need to know to avoid some of the common pitfalls when it comes to investing while getting you prepared to invest your paper dollars into a real physical asset. Now, if you can't make the webinars, just go ahead and register and we will send you a recording that you can watch at any time. And by the way, these webinars are entirely free. There's no cost to you. This is just something that we do to educate our folks out there. So if you're enjoying this episode, please like and subscribe to Bulletproof Cash Flow. It helps the channel tremendously when you do. Now let's go ahead and get back to the show.
Oh yeah, no, hey, listen, I think we can both agree. Buying an asset is easy compared to running it for 10 years profitably.
Agreed.
Right?
Agreed.
I mean, some of the things, you're doing mostly A stuff. Is that what Wood's managing all your A stuff? Right?
Yeah, and Wood really won't manage B or C. And I think that's why we align our interests very closely with each other. Is that we align our interests. We like the same deals. We want to focus on the same deals. We don't want the older deals. We want the newer deals, and that's all they focus on.
It's worth mentioning too. So that's worth reiterating. There's some guys out there that they'll just take an asset and just throw it at any property management group.
Yep.
And I've personally seen a case where someone hands over a C- asset to a Class A manager, and the Class A manager totally screwing the pooch on this thing. They totally mess it up because it's not what they do. They're not good at it. They're not good at handling the clientele. They're not good at managing all of the nuances of these super old assets, or do they want to? They didn't even want to touch it, but they're kind of like they're forced by the owner, because maybe they have many units with them, and they say, oh, by the way, take this C-class asset too while you're at it. And it's kind of like they don't want to do it, right?
100%. And it goes back to the specialty. For example, if I'm coming to Ohio and I want to invest in Ohio, I'm calling you up saying, hey, can we partner? Because you know that market better than I do. When it comes to self-storage, we're not in self-storage, but I can assure you, as the company grows, when we diversify, there will be someone in the company that will have an expertise on self-storage. You shouldn't invest into a company with no expertise. I'm seeing companies buy car washes, buy self-storage, buy hospitality, invest into office all at once very quickly, and it's like, do you have someone on that team that specializes in those categories? If so, wonderful. That's the way you should do it. If you don't, why are you jumping, across the board, very quickly? I think you want to invest with someone who aligns your interest, just like our property management company.
It's funny that that is 100% true, right? The specialty, I think it includes not only from a business perspective, but also internally of what's going on inside your business too, right? I mean, you and I both know, and you and I both do this. We have to raise capital for deals, right? But you primarily focus on different clientele, so to speak, and then you have other folks in your business that focus on retail investors. It's that focus is really needed to support those types of investors. Like the focus is absolutely required. Yeah. It goes into that whole discipline talk we kicked around earlier, and it's like. It's the same thing goes with how you build your real estate company, and I mean, sure, many guys out there right now are probably wearing a lot of hats, but I think if you're going to really expand and grow your business, you're going to have to bring on the right people to help things move forward, right? And that includes building out the team.
Very much so. Yeah. And you got to build out the team. And, as, someone who's built teams and companies before, I don't take a profit from the company. I do not take a profit from the company. It all goes back into the company to grow the company. My goal is to have QC a $10 to $20 billion AUM company, very quickly. And to do so, you got to reinvest back into your company. You also have to reinvest into your people. That's one great thing about our business is it's so lucrative where we can operate. I know a group. He has 13 employees and he operates around 12 billion assets under management, strictly multifamily. You can do that in this space, but you have to invest back into your people. You have to invest back into the company, invest into resources to help your people work better, work smarter, so you can grow a company to that size. You can't go and take all the profits or anything like that and expect to grow a large company. So I think the employees at QC know what I do and how I do it because I'm very transparent with them, and that's why they enjoy working here.
See, that's how you're a real entrepreneur. All entrepreneurs work for free. That's what we do.
I love it.
You work for $1, and I think it's it's funny. I think that's a Robert Kiyosaki thing, right? Where he actually says all entrepreneurs have to work for free
eventually.
Yeah, we all do. You never take a paycheck.
Nope.
I mean, obviously, the bank wants to see they get a paycheck or some sort of income, right? And when you want to buy your car, your house, whatever, unless you're paying all cash for it.
Yeah, no, but, I don't pay cash. I don't believe in paying cash for a car unless it's a exotic, $1 million car. Right. Throw leverage on it. Why not?
Yeah, always throw leverage on it.
I mean, but you can buy a $100,000 car with no money down. Why not do it?
Sure, absolutely.
Because you can take that $100,000, put it into an investment vehicle that you are doing in Ohio or one of us in the Southeast, and it will more than likely get close to the payment that you're paying for the car.
That's right.
Depending on what you're in.
That's right. Because the rate that you're getting, if you could beat the 4% interest rate that you're probably going to get at a lender, which conceivably in real estate you can, then why wouldn't you do that? Yeah,
why
exactly.
wouldn't you? Oh,
yeah.
I know.
But I guess the point is that all entrepreneurs work for free. We don't get a paycheck.
Amen.
I used to be that guy a long, long time ago. I'll never do that again, man. I will never do that again.
I love it.
Terrible. Yeah, terrible. So these days, and going back to your deals, what sort of where do you see things going in the markets that you're attacking? What sort of things are you looking for in the markets you're going after? Considering that there is a shift taking place right now, are you thinking of staying put in the markets you're in? Or are you thinking of pulling it back a little bit and really focusing? Like what's on your mind these days about that?
Yeah. Honestly, we're heavily on acquisition mode. If the deal makes sense, we're staying in all the markets. Like I said earlier, we stay consistent, and we really don't shy away, and we stay disciplined. So we stay disciplined to our fundamentals of real estate. And at the end of the day, location matters. And so we're looking to buy great quality assets in great locations with fixed rate right now. Yes, the leverage is going to be lower, and you're going to have to raise a lot more money to close the deal. However, it's going to, I very strongly believe, position us very well for the next 2 to 5 years for a sale or a refinance to hold that property, get the capital out, and turn that capital into another deal.
Nice. Yeah, I mean, I think we're pretty much doing the same sort of thing, right? We're being very strategic about the markets that we're jumping into as well, and right now we're heavily focused on this market here in Cleveland, heavily focused on this market, especially on development. But yes, we're already looking at a couple of other markets right now that we're kind of like waiting for things to shake out a little bit, because I think that some of the frothiness is still there. But I think once these sellers realize they need a reality check, they're not going to get $100K a door for a C-class asset in East Cleveland. Yeah. If anybody out there knows what East Cleveland is, they know what I'm talking about. No offense to East Cleveland, of course. But it's like the reality check will sink in. They'll be like, okay, I better readjust my expectations. Or just pull the deal off the market and wait it out.
There you go.
Because the debt side of things are going to be really, really sticky. Really sticky.
Well said.
Yeah. So, okay. So someone's listening right now. Hopefully they got a lot of great information out of this. What sort of bulletproof advice would you offer that individual of perhaps what steps they should be taking next?
Yeah, the biggest bulletproof advice I would say is that stay disciplined to your criteria, stay consistent, and gain as much knowledge as possible. If you're just getting into the space, whether you're active or you're passive, gain the knowledge. One thing that we have in today's society is we have YouTube. We have podcasts like yours where you can listen and gain the knowledge. Gain that knowledge and then go out there and take action. You may feel some sort of fear. And I always say the biggest failure in individuals is not them actually failing at the task that they took action on. It's them actually doubting themselves and the fear to even try to take action. Because most of them will say they want to do something, and then when they see it, that fear kicks in and they're like, no, I'm not going to do it because I'm uncomfortable. You have to take action. So all the knowledge you gain today, all the knowledge you've gained listening over, listening over all the podcasts from Bulletproof, take that knowledge, take action with it, and go out there and do it.
Yeah, love it. That's what it is. Action will overcome. Action overcomes everything.
Yep.
100%.
Love it.
Yeah. All right, guys. Well, if you want to reach out to Chris, you can reach him via his website at qccapitalgroup.com. Hope you got a lot of good insight on not only where the market is today, but also some strategies as to how to currently manage through it, because I think we're going to definitely need some of that these days. Thanks for tuning in, guys. I'll see you in the next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.